Thank you for joining us today to discuss the August 1st Spectrum Affluent and Millionaire Investor Confidence Index. And also, we're going to, as we do each month, highlight some of our recent research. Today, we're going to talk about our research relative to wealthy investors' use of social media and mobile technology. This is George Walper. I'm president of Spectrem. Joining me today on this webinar is Eric McDonald, one of our consultants. We'll start first with our overall index. For those of you who are not that familiar with it, each month, as part of our monthly wealth research, we ask a series of questions that we've been conducting since 2004 to understand how wealthy investors are feeling about a number of factors, including their household outlook for the next 6 months, what's happening that's bothering them from an investment standpoint, and we also ask them what their investment intentions are for the last month. And we look at the overall wealth market of $500,000 of net worth and above. And then we also look at the millionaire market, which is $1 million above. And we'll go through this in detail and give you some context of what's happening here based on our research in the month of July. Then Eric will talk about our research, which we've done now for many years, but highlight how wealthy investors are using social media and mobile technology in their financial life, with a particular focus on their relationship with their financial advisors and providers, and what their expectations are and what they want from you. This month, the August 1st index, which we released at 8 a.m. East Coast time on the first business day each month, shows some positive trends from both, primarily from last month. The Millionaire Index is now up 6 points from last month, and compared to a year ago, interestingly enough, it's down 4 points. When you look at the overall Wealthy Affluent Index, it's up from last July, from last month as well as from last July. A little different trend. It's, as you'll see here, the top part of this chart shows the last 12 months. The bottom part shows the history back to 2004. But for those of you that have been following our index, at least through this past year, it was an interesting dynamic that occurred on the May 1st index for the month of April, where you see a pretty plummet drop in the Millionaire Index from 20 to 3, with the Wealthy or the Affluent Index from 10 to 6, with two big factors. The Millionaire Confidence dropped remarkably in that month and dropped below the overall Affluent Index, which rarely happens. And you can see this month, it's 2 months in a row of a recovery for the Millionaire Index, where it's back up to 12 and Affluent is to 6. But it was quite interesting to see what's happened here in the last 3 months. There is no question that a number of factors happening in both Washington and, more importantly, the market impacts these figures, the market being at record levels again. But the roller coaster sort of message coming out of Washington, the political world, does affect these folks in terms of their overall confidence. It will be interesting to see a month from now what happens with two key factors. What happens by the end of August with the healthcare reform, and do we start to see an improvement in focus on tax, revising the tax code as promised during the election? Because those impact people's feeling about the confidence in the future. One of the key components of the index is a series of questions we ask to say, well, how comfortable you are about your overall house outlook. We look at a number of factors: the confidence they have in the economy, their confidence they have in if they own a company, or their employment situation. You can see after a few months of that dropping, it now is moving a little bit more, trending upward. This is a key indicator, we feel. You look back in October of last year, right before the election, or 2 months in a row that was dropping, and then it rose significantly post-election and has stayed fairly high, with the exception of June and May, where it trended downward. This is a critical indicator, we think. It's something wealthy clients, it's what they're really feeling about things. As I said, we look at some subcomponents. The overall outlook compared to June is up 5 points. Compared to a year ago, it's up 3. The subcomponents, with the exception of their overall household outlooks, are also trending upward. You can see that both the change from last month and the change from a year ago. The household assets dropped a few points, not significant, but it is interesting that that's the only one that is dropping. It tends to be kind of something we look at carefully relative to How do they feel about potentially the market going forward? Although this really is essentially flat, but it's something we like to keep a track on going forward. A question we've asked this month that we thought we would take a look at, this is one we've added to our rotation of key questions, and that is, what's the most significant change or action that investors plan to take over the next 12 months to improve their financial well-being? And as you'll see, no changes at this point is what 29% of folks say. 22% said they alter their investment strategy somewhat. You see a little bit of impact of investing more and saving more, paying down debt. But the key two factors of no changes and altering investment strategies are what folks are saying right now. We've been asking this question for a few months as a test to see if it gives us a good handle on adding it to our ongoing rotation. On the next page, you see the same thing but broken down between the overall affluent market and millionaires, where you see millionaires being a little bit more focused on altering investment strategies, looking at new products. So far, these wealthy investors have not thought they're going to change their spending or save more. It's still, that's somewhat low compared to what perhaps they feel in other months going forward. When meeting with clients, we think it's important for advisors to know what they're thinking about relative to investing in different asset classes. We ask a question about, over the next 6 months, how would you invest a portfolio of $100,000 if you had the opportunity? We'd like to look at it over time. So here we thought we'd give you some context around equities, bonds, cash, short-term, etc., looking at and comparing this month to last month, and also the all-time high and all-time low, just to give you some context to some of these figures. It's kind of interesting to look backwards to see when folks were either optimistic about equities or particular asset classes or not. So equities are essentially flat this month versus last month. You can see it's a little less than half of where it was at the high from March of 2012. I think it's interesting that the lowest point in this over the years was May of 2008. And so that's well before the recession really started to kick in with the crisis. So it's kind of interesting to look backwards and see what that means. Looking below this with equities again, but mutual funds, you see similar trends, different kind of ranking numbers, but similar trends. Fixed income with bonds and fixed income mutual funds, similar sort of trends, different time of all-time high. And then cash, which we like to think of as a reserve position, is fairly stable at the moment. And then real estate always being a class that wealthy investors think of as an important class, both their own real estate, second homes, and then investment properties, income-producing properties, all of which are sort of key components of this outlook. Now, Eric will chat for a few minutes about what's happening with wealthy investors in financial services relative to social media and mobile technology.
The first slide we're going to look at is the social media platforms used by affluent investors. As you can see, the greater the wealth, the less likely they are going to use a social media platform. However, there's an exception with LinkedIn, Twitter, and YouTube. The wealthier the investor, the more likely they're going to use those three platforms. The interesting thing about Twitter is their users who use Twitter love Twitter. They're always on it. They're either making comments, checking the news, reading other people's thoughts. Twitter users are constantly on that platform. The use of video is also a key driver. As you can see, YouTube is a fairly popular social media platform. This is important for advisors to know. By incorporating videos on their website, it could help drive investors and help them out.
The interesting thing about Twitter is that this is not just a reaction to the past 12 months with the president using Twitter. Twitter has been a fairly medium-level platform, social media platform, but as Eric said, it's a little bit like a religion, that people that use it extensively, and they expect their advisor to use it, and they expect messages from their advisor that they can follow on Twitter. It's kind of a critical platform for those of your clients that are using it.
All right. This next slide is going to look at what social media platforms are being used to follow their financial advisor. As you can see, again, LinkedIn and Twitter, the wealthier the investor, the more likely they are to follow their financial advisor on those platforms. The Facebook is being followed mostly by mass affluent investors. They're the most likely ones to be following their financial advisor on that platform. It is also important to remember that mass affluent is more likely to be the millennial and Gen X investor, while the wealthier investors are more likely to be a little bit older in age. This is looking at kind of how videos are used on financial websites and which websites investors are using to watch financial videos. As wealth increases, the more likely the investor is to watch a video on a financial website. As for the platforms used to watch financial videos, it's important to notice that the websites of their financial advisor or provider is extremely important, especially for those with a large amount of wealth. 63% of the ultra high net worth watch videos on their website of the financial advisor or provider. The websites of major financial media sites such as CNBC, Forbes, Fox Business is also pretty popular as wealth goes up. And lastly, the websites of major media and news networks is also pretty important. But there's no significant difference in wealth when it comes to kind of that platform. As for interest in the following online tools, if they were available either through a PC, an iPad, or smartphone on a provider's website, the standard kind of retirement tools, those are always important and not really a significant difference by wealth. The one thing that is really up and coming and becoming more and more important as we come into the future is the ability to consolidate accounts from multiple providers into one place. So many of your many clients or investors will have accounts in several platforms, and for the ability to then consolidate and aggregate all those accounts onto one place is extremely important.
Account aggregation has been interesting because it's been around for many years. Excuse me. For a long period of time, it became kind of a folks were very worried about it. And even in this area of privacy, it's interesting that it's not become an area where folks worry about it. What is, for the first time we saw this quarter in particular, was a trend upward that investors are saying, as Eric said, they would like to consolidate all of their financial information and would prefer to do it on their advisor or provider's website, the provider meaning perhaps the custodial firm for the advisor. But this has actually been a shift from where they would say they would more likely do it through sort of online banking type firms, et cetera. So it is something that the advisor community needs to track and pay attention to the next few years, because it will be a service that more and more wealthy investors expect from advisors, in particular Generation X and millennial investors going forward.
These next few slides are going to look at the interest level and following activities on their provider or advisor website. One of the key ones on this page is the articles or research on financial topics and products being available on the advisor's website. Investors are interested in learning and in content, so it's important for advisors and providers to provide this content and material on education, products, financial topics on their website so that the investor does not have to go searching for it. They're able just to go to their advisor's website, find it there, and learn and educate themselves on different topics and research. On this page, obviously, all investors want access to their personal account information. What is more important is, again, to look at kind of this aggregation of balances in one place for multiple providers. As wealth increases, those interested in it also increases. But again, even mass affluent, there's still a large percentage of them that are interested in the ability to kind of consolidate or aggregate their balances in one place from multiple providers.
I believe I mentioned earlier that the index is issued the first business day of every month. It's a critical component of our High Net Worth Insights newsletter, which is designed to provide advisors and any other staff member who touches a wealthy client insights from our index and then from one of our more recent research studies, such as one of the articles this month is what's happening with social media, mobile technology, etc. It's a great tool. It's something you might want to consider. Um, we also are in the middle of doing interesting research, both qualitative and quantitative, with professionals being doctors, lawyers, and accountants. And there's an article in this month that sort of recaps some of our interesting findings about doctors and their relationship with their advisors, followed up soon by lawyers and then accountants, where we're doing some online focus groups with these individuals, and then looking at some of our quantitative assessment of professionals. In addition to senior corporate executives and entrepreneurial business owners, professionals are a critical key wealth component of all three wealth segments, but in particular the millionaire and ultra high net worth. So it's something to think about as a tool. Thank you very much for joining us for this webinar. Feel free to give us a call or reach out to us. Our general phone number is 224-544-5353. Thank you.